What's going on, everyone? In this video, we're going to be talking about my personal prop firm challenge tips, how you guys can pass these evaluations or challenges, how you guys can actually get funded and then get on the road to getting payouts. So with that being said, my name is D'Anthony. I am a full-time options day trader slash prop firm futures trader. With that being said, I am funded with 3 different companies, 3 different prop firms, and I'll go ahead and kind of explain to you guys a little bit later in this video as to why I'm funded with not just 1, but 3 different companies and what I plan to do and how I plan to scale these 3 different companies. If you're interested or curious as to which prop firms I am funded with, those links are down in the description box below. But my tip number 1 is going to be to understand the rules, okay? I know this sounds simple. I know people are going to say read the fine print. Some particular prop firms have trailing drawdowns. Some of them have end of day thresholds, this, that, and the other. A lot of verbiage and wordage that may confuse you. Here's the thing, and here's what I like to say. Make it simple, right? Make it simple. If, for example, you take a $50,000 account challenge and your drawdown, max drawdown, whether it be a trailing drawdown, end of day threshold, whatever it may be, and let's say that trailing drawdown is 2,500, just understand this major key point. Do not lose more than 2,500. Now, that sounds very, very simple, but a lot of times once people start to get going, they start to look at it. Well, I have a $50,000 account. Yeah, I can only draw down 2,500. It's okay. I'm going to take more trades. Here's my tip number 2. Understand how much you really should be losing on a day in and day out basis before you call it quits. My example, my recommendation is this. If your drawdown or your cutoff before the rug gets pulled on your account is $2,500, consider it like this. You have a $2,500 account, not a $50,000 account. Psychologically, that is going to make more sense to you than thinking or trying to assume that you're actually trading a $50,000 account. Now, you may have leverage up to buy instruments up to $50,000 intraday, some margin, look at it like that, but you actually can only lose 2,500. So on that 2,500, you can't really risk like 0.5% on 2,500. Then you would be talking about $10, $20 and that you're risking before essentially you have to stop out for the day. Here's my best recommendation to you. If your trailing drawdown is $2,500 or your max loss is $2,500, whether it be for the week, whether it be for the day, whether it be intraday, trailing, it doesn't matter to me. 25 is the number. What we want to lose is no more than $250 in one day. How we are going to obtain this, because my whole goal is helping people pass these challenges, actually get funded, and then actually getting a payout. It's nice to say that you're doing a challenge. It's nice to say that you got funded, but it sucks when you never take a payout and all you're constantly doing is loading more money into these challenges. I will be very, very transparent, okay? The business model of online prop firms is like this. Are they a scam? Absolutely not. Do some companies make money, or 99% of them make money on people failing? Of course, but doesn't the overall stock market, the overall market as a whole, the brokerages out there, the market makers, don't they make money on people losing money anyways? So what's the difference, right? It's just a different business model. Okay, so get that thought out of your head that, well, maybe these companies, they don't pay out. Maybe, I never trade live in the live markets. I only trade demo. Guys, if you can trade live price action and you can make money, follow rules and take a payout, it doesn't matter if you're trading prop, it doesn't matter if you're trading your own personal account, it doesn't matter if you never go into the live markets at all and you're just simply playing demo and the company is paying you out from their own back pocket. What does it matter? If you want to be a trader, then trade. Don't worry about all the other odds and ends, okay? The only people who are really worrying about the odds and ends about, oh, well, I never trade in a live market, I'm always kind of just staying in simulated, they never really tell me when I'm actually going to go to a live account. It's the idea. What is this big idea or this big, dream that you have if you need to trade the live markets? Because let me tell you this. Out of 10 people, 8 people will trade the live markets. If they gave you an account, you would blow it up in a week. I can guarantee you right now have probably blown up an account in less than a week. Some of you guys have probably blown up an account in just a matter of a couple of days. Take a step back, relax. There is no race to the finish line. Here is how you're going to get funded. You're going to make sure you read the rules depending on which company that you want to go for, right? Whether you want to take a 2-step approach, whether you want to take a 1-step approach. The only difference between the 2 and the 1-step approaches is, let's say, for example, a company only has a step 1, meaning you need to meet a certain profit goal before you can get funded, and there's no actual step 2 to that. There's still a back end step 2, because normally those companies will have a certain amount that you have to make after getting funded before you can take your withdrawal. So you're still essentially trading a funded account, but you are still doing a step 2 before you can actually take that payout. Some of the step 2 companies that do have 2 steps will allow you to actually, once you do move on to the funded account phase, you can actually start withdrawing once you start making a little bit of money. Maybe there's no 30-day wait or 10-day wait or 7-day wait. Maybe you just have to make a few bucks and then you can start withdrawing. So there's really, yes, you're doing 2 steps in the beginning, but you can take your actual money out quicker. In some of the 1-step programs, it's like doing a whole nother step once you're actually funded, right? So again, just read the rules, pick the best company. Obviously, we don't want to pick a company that we've never actually heard of before. We want to have a company where, you know, there's other traders who are on there, people are actually getting payouts, and just do your basic due diligence, right, guys? At the end of the day, it's all about having basic common sense. But what we're going to do is, as soon as you pick that one particular prop firm, you're going to get that max loss, right? Like if it's a $50,000 account and you can lose $2,000 before you get kicked off the platform, or $2,500, then your daily loss limit, your personal daily loss limit, is not 2,000, okay? Because here's where the psychology part gets people very, very confused. Someone will say, I've got a $50,000 account, I can lose $2,000 before they give me the axe, right? So what do? They start taking trades, they start losing money. They're down 100, they're down 800, they're down 1,500, and then they think to themselves, well, I can lose up to 2,000 before they kick me off. Let me just continue to make some trades and make that money back. Next thing you know, you lose 2,000 in one day, you're out. So here's how you get around that. If you have a $50,000 account, and I'm just using it as a very general example, let's say you can only lose $2,000 before they give you the axe. Lose 200. If you lose 200, you are done for the day. Okay, you are done for the day. If you feel the itch to where you still have to take trades and you feel like that's not enough risk for you, here's where we get around that. Okay, remember in the beginning of the video when I said I have 3 different firms that I work for, and I'm funded multiple accounts on 2 firms and 1 account on another, right? So out of the 3 firms, I have a total of 5 funded accounts. So as of right now, and I plan on scaling that up to 10. And I'll make a video series as to my overall big plan on what I plan on doing with scaling these accounts. But let's say, for example, you have 3 $50,000 accounts that you're currently either funded by or going through evaluation or challenge process. So if you have 3 accounts, all 50,000, you have a $2,000 loss limit on each of those accounts. Technically, we're only going to allow ourselves to lose $200, but now it's times 3. So now our daily loss is now 600. This is going to keep us in the game. Sometimes we take that first trade of the day and it just doesn't work out. We either jump into the markets at the wrong time, the market catches us by our coattails, and we just are trying to chase the move. And then it kind of takes us a little bit of time, maybe 30 minutes, an hour, to kind of settle in and relax, let the price action relax. And then that next trade is the trade that actually goes in our favor. Well, at this point in time, if you took a $200 loss on account number 1, you can just simply switch to account number 2 and give yourself a fresh $200 daily loss limit on that account challenge or that funded account. If you do take a win and you're up anywhere between $100 and $300, I would always recommend to call it quits. I am in the business of taking this very low and very slow. I'm not here trying to make $10,000 a day on a prop firm. Okay, if I want to do that, I'll load up $100,000 in a personal account and I'll go trade my own equity to do that, right? What we're doing here is trying to add supplemental income. We're trying to grow our personal accounts, or we're trying to pay those bills at the end of the month, or we're just trying to give ourselves extra revenue. So instead of making $75,000 a year at our normal 9 to 5, if we can add 25, 30, now we're making 6 figures. You get what I'm kind of saying here? So again, if you have 3 accounts or 2 accounts, you're just spreading out your risk. You're allowing yourself to be able to take more trades, and you're allowing yourself to be less stressed. Those are my first 2 tips. Make sure you do your homework, find out which prop firm you want to go to. Also, make sure you have a strategy in place. Make sure you're working with a coach, a mentor, a community, a group, someone that knows what the hell they're doing and how to do this. And then 3, work on your risk management. You are not a trader. You are a risk manager when you decide to go for these prop firms, okay? The idea of being a day trader and being, this big time retail trader, right? Everyone's so ecstatic about. Guys, you are a risk manager. They are telling you, just play by the rules. We will pay you out if you follow our rules. Many people do not follow the rules, and they cannot follow the rules. Why? Maybe it's just ingrained in us, right? To go against the grain, to be a rebel, to be an outlaw, to just carve our own path, right? As human beings, we've always just gotten ahead by carving our own path and setting our own stone. Play by the rules, manage your risk, add multiple funded accounts, spreads out the risk, and now instead of making $1,000 a month on one account, which is nothing, and you would never, consider stopping at $1,000 a month, but if you have 3 or 4 or 5 accounts that are all making $500 to $1,000 a month, now we're talking serious income. I hope this little bit of context kind of makes you think. If it did make you think, make sure to like, comment, and subscribe. I'm definitely going to do a whole video series on how to actually get funded with prop firms from start to finish, strategies, mentality, mindset, actual tips, tactics, things that I use on a day in and day out basis to help me get funded and to help me continue to grow my portfolio. If you guys do want to join my Discord, that link is down in the description box below. If you guys would like one-on-one coaching and a whole strategy guide, definitely go to evolutiontraders.com. I will see you guys all in the next video.